So the UK budget was announced yesterday, and whilst it wasn't as bad as we were all bracing for, it still wasn't great. So in this video, I'll be going over the key details that you need to know about the changes that have been made to capital gains tax, which affect us cryptocurrency holders, and one big detail that you may well have missed. So let's get into it. So starting off then with a very quick disclaimer, as always, that of course neither myself nor Learning Crypto are professional accountants or tax advisors, so nothing in this video should be constituted as financial advice. But with that out of the way, let's get into what was announced on the budget. So I'm obviously only going to be going over the changes to capital gains tax. I'm not going to be going into anything else, and this will obviously affect you if you hold crypto and or stocks and shares. So let's get into it. What they said, as you can see here from the HMRC website, the main rates of capital gains tax from 10% and 20% have now changed. So the lower rate of capital gains tax has been moved from 10% up to 18%, and the higher rate of capital gains tax has moved from 20% to 24%. So there was rumours and some very scary rumours that it was potentially going to be brought in line with income tax, and so that higher rate was going to double up to 40%. Luckily, we didn't get that. However, there was one very sneaky thing they did, which we did warn about on the previous tax video, was that the changes were implemented as of yesterday. So any crypto that you sold from yesterday onwards is now charged at these new rates of capital gains tax, not the old rate. So anything you sold from April of this year up until the day before yesterday, so the 29th of October, will be charged at 10 and 20%, whereas from yesterday and onwards, it is now 18 and 24%. They didn't actually announce that during the budget. She didn't mention that. She said that all the other changes were going to be coming in April, but she didn't specify that this was changing today. But as you can see in black and white on the HMRC website, it is as of yesterday. So that's pretty much it in terms of the changes. Fortunately, we still have the tax-free allowance of £3,000, which is not great, but at least they didn't get rid of it completely. So the first £3,000 you make of capital gains, you can take tax-free, don't need to announce it or declare it, I should say, which is good. A little bit of extra money in your pockets. We were hoping that maybe that would be increased. We were obviously worried that it might get scrapped. It didn't change. So that is as per normal. Now, one other thing that didn't change, which wasn't expected to either, was the fact that income tax rate bands haven't moved either, and they're not going to move for the foreseeable future. I think it's 2028 will be the first time they move. So your basic rate of tax still starts at £12,571 up until £50,270, which is 20%, and then your higher rate of income tax kicks in at that £50,271 up to £125,140. And if you see the last video that we did on tax, you'll understand that these are important when it comes to working out how much you owe for capital gains. And we'll go over that in just a second. But one issue with this these tax bands not moving is it creates what's known as fiscal drag, and essentially means that more and more people, obviously as inflation increases prices and you get paid more in your wages, you get dragged into the higher tax band. So with the personal allowance, you're allowed to earn £12,570 before you pay any income tax. As I say, that's now going to that's not moving. So the more you pay, you're then going to start getting pushed up into the higher rate. So you might go from a basic rate into a higher rate, or even people that are on higher rate going into that additional rate of over £125,140. And if you are in that, you don't actually get your personal allowance of your tax-free income up to £12,570. So as I say, the problem with these bands not moving is the fact that you do get dragged into the higher tax rate as inflation goes on. But let's take a look at the breakdown of how how capital gains tax works. So as we talked about in the previous video, if you are in the basic rate of income tax, so if you earn less than £50,270, what you'll do is you'll figure out how much capital gains you've made. You then take your £3,000 tax-free capital gains allowance off, then take your capital gains, add it to your income, and the amount between how much you earn in income up until the £50,270, that's the amount of capital gains you will be charged at now 18%, and then the rest over that is then charged at the new rate of 24%. If obviously you earn over £50,270, then everything in capital gains is going to be charged at that top rate of 24%. So let's take a look at an example again, as we did in the previous video. Now, first off, if you don't like paying tax, as I'm sure none of us do, then go check out the video I made last week on the best ways to save and invest your cash without having to incur and pay taxes. And it's not just the traditional methods, it's also ways of being exposed to the crypto market as well. So go check that out. I'll link it at the video at the end. I'll also put it in the comments below. Now, we are currently on a website here called Tax Scouts. I used it in the video before. A lot of people have got in contact to say that they found it a very useful website. So everything I use on here is completely free and without making an account. So definitely go check it out. And it's not just for working out capital gains either. You can use it for working out wages, national insurance, all that sort of stuff, what your actual take-home pay might be. So if you get some news that you're going to get a pay rise, go on to Tax Scouts and you can actually figure out how much you're actually going to be left with at the end of the month and whether it's actually a decent pay rise or not. So let's get into an example. So similar to what I did last time, going off the average income in the UK, which is £35,000. So that also gives us a nice example because we're using both tax rates as opposed to just the one. And I'm going for a £100,000 profit in terms of capital gains from our crypto bull run. So fingers crossed, nice and optimistic. It doesn't matter if you go shares or crypto, it is exactly the same. So as I say, in this example, £100,000 profit, £35,000 salary. Let's see how that gets broken down. So first of all, you pay no capital gains tax on the first £3,000 you make. We know that. You would then pay £1,527 at a 10% tax rate for the next £15,270 of your gains, because of course that £15,270 takes us to that first band of tax threshold, or the upper threshold of £50,270. And then the remaining capital gains you've got, you're going to be paying 20% on, or you would have in this previous example. It's now obviously 24, so you would have paid £16,346 at 20% tax rate on the remaining £81,730 of your gains. And you can see that from £100,000 you would have paid £17,873 in tax, which would have left you with profits of £82,127. Now, in this new updated example, that was obviously what you would have paid if the rate stayed the same. Now that the rates have gone from, the lower rate has gone from 10 to 18% and the higher rate has gone from 20 to 24, this is now the new breakdown. So again, no change on the first £3,000 you make, that is still tax-free, but you will now pay £2,748 at an 18% tax rate for the next £15,270, because of course that takes us up to the tax bracket. You will then pay £19,615 at 24% tax rate on the remaining £81,730. So from the exact same example with the new tax rates, £100,000 profit, your new capital gains tax bill is £22,363 as opposed to £17,873. And so your profit after tax is now only £77,637 as opposed to £82,127. So you can see for every £100,000 profits you make, it's about a £5,000 difference. Although that being said, of course, it will highly depend on what your income is. And of course, it now depends on when you took those profits, because if you took profits or disposed or sold of anything between April up until the 29th of October, they're going to be charged a different tax rate than what you're now going to be charged from anything you sold yesterday onwards. So very important, obviously, to seek professional advice in terms of an account. Get an accountant that knows what they're doing, so you know you're paying the right amount of tax. And as I mentioned in the previous video as well, a really good tool to use to work out how much you potentially owe in taxes is Coinly. So this is a really nice and easy website to use. You just hook everything up with APIs and CSV files, and it tracks all of your wallets. You can even pay to have a daily refresh on all of your wallets, so all of your airdrops and deposits, withdrawals, staking rewards, etc. get calculated daily, and everything is free to use up until the point you wish to generate a tax report as well. So what you can do, get a free account, hook up your APIs, download your CSVs, put them on there, see how much you potentially owe. And then if you do want to generate a report, you pay for that, pass that to your accountant, and you are away to go. So hopefully you found this video useful. Please do like and subscribe if you did. Let us know in the comments below what you think of the budget. Is it as bad as you thought? Are you happy? Are you relieved? Bearing in mind, of course, that the amount of tax, capital gains tax you now pay has actually gone from a fifth to almost a quarter. So whilst 20% to 24% doesn't sound that bad, when you look at it as a fraction, it's still not great. So as I say, let us know in the comments below how you feel, and I'll see you on the next one.